and gentlemen, analysts and associates, welcome to your managing director secretary's favorite podcast, the Big Swinging Decks Podcast by Litquidity and Moran. This is not financial advice. You'd be a bottom bucket analyst to make investment decisions based on what is discussed on this show.
Welcome back to another edition of Lit's already laughed a Big Swinging Decks. You can't laugh when I'm doing the intro, dude. It throws me off, okay? And I'm talking to an avatar here, as the people watching the YouTube will see. But we're excited because we have a very special guest with us this week. And, Lit, I'm actually going to have you introduce the special guest because I think a lot of people are going to be curious as to your relationship.
So we've got Christina Melas-Kyriazi. She's a partner at Bain Capital Ventures. And if anyone has been following, I am scouting for Bain Capital Ventures, and it is, in big part thanks to her. So we're going to be talking about her background and, everything from Goldman to her time at LinkedIn to HBS to then a firm and now at Bain Capital Ventures. So she has an exciting background, and, we think it'll be interesting for the shareholders to hear it.
Yeah, and she's going to give some great insight from her time as an investment banking analyst at Goldman to her thoughts on being a female in a male-dominated work environment. She's going to play a little edition of Cash or Pass with us, and also talk about any improvements that could be made to Twitter based off last week's news. So, without further ado, Lit, should we get into it?
Let's do it.
Awesome. Lit, with us this week, we have a very special guest who you actually have quite a better relationship with than I do, because this is my first time meeting her. So why don't you take it away and give us a little bit of an introduction?
Sure. Yeah, I'm happy to have Christina Melas-Kyriazi. Hopefully I pronounced that correctly. And she is a partner at Bain Capital Ventures. And we also work together at a certain capacity, being a scout for her and Bain Capital Ventures.
We're all pseudo colleagues on this, aren't we?
Yeah, all part of the Bain family. So, Christina, welcome to the podcast, and great to have you on.
Thanks, guys. Yeah, no, it's a good fam. Really excited to be here.
And so, Christina, for us, we know what you're doing right now at Bain, but for a lot of our audience, we call them shareholders. So they're currently working in their investment banking analyst grind, doing their 2-year programs, moving on into private equity. And, I think you have a lot in common with them because you also started your career as an investment banking analyst. Care to tell us a little bit about that?
Oh, yeah. Oh, man. It's you're forcing me to go way back deep into my brain and remember what that was like. Because I think I blocked a lot of it out because, I only remember
suppress those memories.
Yeah.
Yeah, exactly. No, I loved it, even though it was kind of like an intense experience. So I joined, Goldman Sachs out of Stanford. I think I was really excited about learning as much as I could, working with super smart people. I liked finance. I actually I was going to work in a tech group in San Francisco, and I really wanted to move to New York. So I ended up in the Industrials banking group.
Oh,
Industrials
okay.
at Goldman. I would not have taken you for that. Wow, that's kind of a plot twist.
Yeah,
I know.
Given the trajectory, I would have thought, TMT, GS,
That's
to tech.
great for our shareholders to hear.
It is, because I kind of thought that all groups would be, you would get a similar experience, but turns out you don't. The companies, and that's actually one thing that I learned really quickly. I was like, well, all of the sort of industrial tech companies, aerospace and defense, the cool sectors, I was really excited to work on. And then there were a lot of really slow growth companies where it was just boring as shit. And, I think that, in those 2 years, I learned really quickly, one, finance was interesting, but capital strategy, and particularly debt raising for slow growth companies, was very much not my bread and butter.
It does get very technical.
It gets
if anyone
super
wants
technical.
that.
Yeah. And so, I realized like the M&A was interesting. Anything strategic was really interesting, but I was like more interested in the product and how these businesses operated. And so I just realized like pretty quickly that I wanted to do something that had a lot of leverage, and turns out technology is the place where you work with businesses that have a ton of leverage. And even as myself, right, I was like, wow, anything that's a services business, you're scaling by hours in a day. And that can be like a kind of tough dynamic. Whereas the beautiful thing about software and tech is that you can get a group of engineers together, and if you build something that people want to use, like there's theoretically no limit to how many people can use it. It can get to billions of people. That's why tech and software is just, it's like so fundamentally beautiful, I think.
It's different.
There could be like a billion people having, a widget on their car from some industrials company in the Midwest. No, I'm kidding. But one question that I want to ask you off that. So you start at Goldman, and you're going in the industrials group. I'm not sure if you summered there or what, but was your mindset just, I'm going to do 2 years, get experience, and then move on? Or what were you kind of thinking at that point in your analyst stage?
Yeah, so I was kind of lucky that I had actually applied to business school in undergrad as well.
Oh, okay. Nice.
So I had sort of done this Harvard 2+2 program where, looking back, I was like, man, really, I was like way too aggressive. Like, how did I plan out so many years in advance what I was doing? But I did have this idea that like maybe I'd enjoy finance and I'd go into private equity. But I remember, the recruiting kicked off, and I was like sitting in some huge mahogany office with like 20 other analysts, and I just like felt like a sheep. And I was getting grilled about like why I wanted to join this mega cap private equity firm. And I was giving just some BS answer, and in my head I was like, I don't think this is the right path for me.
And so you went through the traditional private equity process then? Like just, felt it out a little bit?
I did one or two. I started it, and then I quickly pulled out because I just realized like life is not an audition for like every, the next step and the next step. Like you have to love what you're doing. Otherwise you're never going to do anything interesting or special, or you're not going to like it. And so luckily the kind of buffer of saying, well, worst case scenario, I'll go to business school after this, gave me the confidence to do something pretty different than most of my peers and just say, I'm going to go and find a job in Silicon Valley, and I want to learn how world-class companies are built. So I'm going to go figure out where I'm going to learn the most and enjoy it. And this was in the era of hyper growth of social networks. So I got pretty lucky to land at LinkedIn, where I found a super cool group that had a lot of ex-finance people, shared like similar skills and interests as me. And we were this little SWAT team. And so I got to apply my finance skills and work on a hyper growth, consumer internet company that also had 3 business models. It had its subscriptions, it had, ads, and it had a SaaS company too.
I think that's so awesome. And for our shareholders who don't know what a 2+2 program is, going back to that. So Harvard created this where you essentially apply when you're in undergrad to business school, right? And you can go anywhere for undergrad. Like you went to Stanford, but then you're working for 2 years. Then you have the guaranteed admission to Harvard Business School 2 years later. So 2+2. They started doing it. So I went to Darden for my JD MBA, and they started doing that one of my last years there. And so it's kind of made its way down in the rankings, if you will, to other schools, which is a phenomenal idea because I think it does really open that mindset to be, ready to do something else. But Lit, I think that's hilarious about starting the actual private equity interview process, because we just talked about that, and then being like, nah, this isn't me.
Yeah, and I'm feeling a little underprepared here without the MBA in this whole conversation. I
can barely spell on Slack, so I think you're fine.
Yeah, no, I'm glad I didn't go, honestly, because I've done exactly what I've wanted to do, and I've found MBAs to be more of a career pivot type of tool, or advancing if you're in private equity, or looking to just continue to get up there. But that's not to say I don't wish I could have partied for 2 years, but that's great though. But so how was the time in LinkedIn then? Like, what did you learn there, and then how did you then go into HBS thinking, okay, like what do I want to get out of this, and like what do I want to do after?
Yeah, I mean, so LinkedIn was an amazing experience, and I'm actually still really close to my whole team, from LinkedIn. The BizOps group was an interesting one because we kind of mapped to the product team. So I got to work really closely with the product managers, and that's actually where I got my first inclination of like, oh, that's what I think I'm going to be doing next, or what I want to be doing next.
Oh, interesting.
Yeah, but we also owned the user growth and engagement forecast model. So our team was responsible for predicting user growth, engagement across all of the various LinkedIn products, and we owned this like 100 tab model that we would run once a week, and Jeff Weiner, the CEO, would grill us on the numbers of why did page views on profiles go up 5% week over week, and we were like, I don't know, we'll get back to you, and then we'd stay up all night trying to figure it out. So it had a little bit of that. Like
every finance job.
Exactly, but I loved that part because I was like, this is so cool. I'm applying these modeling skills and critical thinking that I picked up in banking, and I'm applying it to consumer internet and trying to understand the drivers of growth for a company. And so you can actually pick apart the underlying drivers of growth on LinkedIn, including things like how many people uploaded their address book and then sent out invitations, and how many people accepted those invitations, and how many people came back. Right, and there's a whole ecosystem we mapped out. It was an incredible. And actually, I totally recommend people who are transitioning from finance, if product, I think, is a great place to go if you can land that job. If you want to still use your skills, a BizOps role at a hyper growth company is a great way to move to tech.
And so in that vein, just to kind of get your mindset, so one of the fascinating things to me when I started business school was that, you go in and the recruiting process essentially starts right when you get there, right? And where I went, it was kind of, okay, banking, consulting, or general management, which was kind of everything else, which I would put product under. But so you kind of, you're going into LinkedIn thinking, okay, I'm going to work here, get experience at the company. And so still at this point, it seems like the VC stuff wasn't even on your radar yet.
No, it wasn't actually. I mean,
interesting.
It wasn't. It was something that I had thought about, but it was definitely not in any way a career goal or something I was trying to do. I think it was really in business school that I realized that investing was something that, especially investing in early stage technology companies, was something that could marry my kind of financial analytical side and also kind of creative product oriented side. But again, I didn't even end up as an investor for another 5-6 years post my MBA. And I can talk about my angel investing, but that was where it really was only by doing that I realized actually the angel investing turned into one of those things where I was like, I love this so much. I can make my side hustle my full-time job, something that I know people on this call know well about.
Mine was a little different. It was, how do I turn meme posting on Instagram and LinkedIn to really turn that into a business and do it full time.
Also a side hustle though.
It was a side hustle, and
memes of production.
Yeah, exactly. Seizing the memes. Yeah. So I guess pivoting then from your time at HBS and getting started in angel investing, how did you start getting deal flow and in the mix of all that stuff? I assume your Stanford network had to play a small role.
Yeah, definitely. I mean, I think the thing about angel investing and investing in general, especially venture capital, it's a lot about, it's like pretty personal. Like it's a lot about you. Whereas I feel like Goldman is in many ways you know, when I got there, I was like, I'm getting a set of skills, and they really value these skills that I'm acquiring, that I've like picked up in training, and like who I am or who's building this model like actually doesn't matter at all. I'm like interchangeable with 100 people. But it turns out in early stage investing, who you are, your fundamental beliefs about the world and where it's going, and who you know, and in your relationships with them, and the way in which you support people, like all these things matter a lot. And I find my life is pretty much a big blur of like work and life. Like there's not even a line in between. And so in many ways, the angel investing felt like a very natural extension of wanting to support my friends or people I knew that I thought were working on really hard, interesting technology problems. And in a world like in an alternate simulation, I could clone myself 20 times and I'd go work for all those people because I thought what they were doing is so like inspiring and should exist. And that's really like the wedge into angel investing for me. It was like, I think these things should exist. I really want to support these people. I want exposure to whatever they're working on. Like, hey, will you take my money? And when I started, it was like very small amounts. And actually angel investing was like pretty different when I started. This was back in, 2015, 2016. People were much more concerned with having like a clean cap table, and they always had minimum check sizes that were like above what I could write. And so it did take a little bit of sort of convincing in the beginning of people to be like, hey, take a chance on me because I just want to help and I want to support. Whereas I actually think the barriers to angel investing are much lower now because AngelList has invented roll-up vehicles. Like the whole business of the kind of micro fund or angel, super angel is just totally different in the last 5-6 years. So
that's kind of like good to know because I started angel investing early last year, and all of these tools that you're saying were already around and made it so easy to just hey, here's a AngelList roll-up vehicle, here's an SPV tool or whatever, and got into it. And so that's definitely something that wouldn't have been possible, especially without being on Twitter. But we could definitely get to the power of social media and how everything has changed in a little bit. But I did want to ask you a question then on you were a scout yourself. How did that come around?
Let's hear about this. We're getting into what everyone wants to know. How did Lit secure this job?
Yes. Lit, how did you do it?
Just say it at the end of the podcast so you can get everyone listening throughout.
Exactly. You have to wait until the end for the big mic drop.
For you, Christina, how did you, not Lit, shut up right now, how did you become a scout?
Yeah, so I think I became a scout, again, not trying to, more just like I was starting to show up on cap tables. And so it was really through, pre-existing relationships and being someone who had a point of view on interesting technology companies. So I think anyone can become a scout with the right relationship and access to interesting deal flow. I think that's like what it comes down to. Do you know a firm well enough, and can you bring them stuff that they wouldn't otherwise see? And so that's, or can you give them a perspective that's different based on the company you're working at or the part of the company you work in. So as a product manager working in fintech, especially at the intersection of fintech and e-commerce where a firm was, I had like a differentiated access and point of view to both people and companies that were kind of getting started in that arena.
So that's actually you are leading with the questions where we want to take the conversation, because the next one was about your time at a firm, the buy now pay later company, and so could you tell us a little bit about like how'd you end up there, and kind of again with the whole trend of like the time that you spent in investment banking and this whole thing about investing, like what did you get out of it, and what was your role there?
Yeah, so Affirm, I actually, out of my MBA, it was one of the companies that I talked to and interviewed with. And I ended up not joining Affirm, at that time. But it was something that I was tracking. And so after I had been at GoFundMe on the product side for a few years, I kind of checked back in, with the team. So at the time, Jack Chow was our head of product, and he's this like fantastic product leader. And he had sort of, I had been friends with another amazing woman named Nikki Srikumar, who's now head of product at Addy, which is like a great BNPL company in Latin America. And so I sort of met these people, and I just knew that Affirm was about to step on the gas, and they had really figured out their like go-to-market strategy and their underwriting strategy, and they're like this is really working. We're about to step on the gas. And I was like, I'm not going to miss this again. Like I missed this once. Like, this is going to be a huge thing. I'm not going to miss it again. And so I left GoFundMe quickly and I joined. But really, what Affirm did that was so innovative was it was the first time that a company could give someone a microloan at the point of sale. So before, if you wanted to give someone like $1,000 loan, it would have been too expensive to, acquire that customer out in the wild. But if you're doing it at the point of sale when someone's trying to make a purchase and it helps them buy more and it changes the chances that they will make that purchase, all of a sudden then the retailer wants it. And so all these retailers were like, this is a huge unlock for us. Like we're all dealing with high customer acquisition costs, like anything that'll help us convert that customer, we're going to do. And so Affirm really unlocked that. And especially for like at first it was like slightly larger things like mattresses and Pelotons. And then they figured out how to make it, accessible at any price point. But
yeah, how do you like underwrite a microloan to someone? Like what kind of information do you have, and like what's the payback rate on these types of things?
Yeah, so I mean that's sort of the secret sauce of Affirm, is the fact that you can collect a few pieces of information from someone, so what they're buying, where they're buying it. You can kind of collect their name, last four of their SSN, and some 5 simple pieces of information, and you can go figure out who they are. You can match them with a credit report. You can figure out how much credit you want to extend them. And then you can do it all with APIs in 3 seconds. That's like really cool. That was very hard to do.
What do you think, and this is just like the one pushback I know to say like in Affirm, right, is that if you're going to go, buy something expensive at Best Buy, but then you're maxed out on your credit cards, that the credit agencies and the people issuing the cards, they're not going to know, and Affirm's not going to have the data, right? So like, do you think that it's possible that, this being one of, if not the only negative thing someone could say, but that, it could create more of an issue for people who are overspending?
Yeah, I mean, I think Affirm, first of all, can see your credit utilization for open lines, because that's reported.
Maybe the Washington Post article I read was wrong.
Yeah, but I mean, I think in general there's a broader, I don't know, morality question about like how much should you let people make decisions about credit utilization versus not. And I think Affirm actually took a really balanced point of view, which is like they're not going to extend you more than they think you can pay back. And so that's the whole business of lending, is like you want to give someone, you want to be able to understand who's going to pay you back with what certainty. And I think, consumer credit's actually still looking pretty good right now, and was great throughout the pandemic in many parts, thanks to all the stimulus money.
Thank you, Jerome Powell.
Yeah.
Yeah. No, so that's definitely interesting. And I mean, I personally have viewed buy now, pay later like sometimes where I'm like, well, should I like use it? Interest free? Like, why not? Right? Like time value money. But that's something I guess I can't really relate to because I tend to just buy things outright. What about you, Mark? Have you used buy now, pay later services?
No, I haven't. But I mean, I think it's like it's a very innovative idea, if, let's say it's for a computer or for something like longer term. Like I'm thinking like back in like grad school, like, I definitely would have much preferred to like, drop 2.5K on, over time than, at once with something like that. But
fraternity dues.
Yeah, right. Yeah, exactly.
Yeah.
But
Well,
so the
Yeah, no, I was gonna say people are trying to innovate. I have seen a buy now pay later for X company across pretty much every spend category, and I think it is because it's a better way to pay over time than revolve on your credit card, right? Like you guys have enough money in your bank account to pay for something outright, but if a lot of people don't, if you want to smooth your cash flows, like would you rather revolve on a balance, or would you rather know exactly how much you owe every month? It's just a better product, I think.
Yeah. Well, I mean, especially too, like, in this creator economy that we live in where people are getting irregular, cash flows. I mean, that's also true for like investment banking analysts who are getting a significant portion of their overall pay in their bonus, right? So it's something to smooth it. I get that. But what's really interesting about your time at a firm is, so you start in 2019, in early 2019, there's like 400 employees. And by the time you leave in December of 2021, there's about 2,000, right? So like, what was that growth like, and how was that a learning experience for you?
Yeah, the growth was crazy, and it was a ton of fun. One of the things that I love most about a firm is that it attracted a really entrepreneurial employee base. Many because, Max Levchin is such an inspiring entrepreneur himself that the promise of like, okay, come here and help scale this thing. And then afterwards, if you want to go start a company, if you want to join a 2-person company, like go do that. Like that was very much the ethos. And so the people I met and worked with were just some of the best and smartest of my entire career by far. And so the time there was really about the people. So how do you scale from 400 to, over 2,000? Well, it's messy, right? Because how do you keep the bar high for hiring? How do you organize and scale leadership teams? Like, how do you rethink information sharing and transparency, especially like after you go public? And so I felt like we were every few months was like a rethinking of those things. And I think, the team was just so devoted to the mission and the overall like development of the product that you just kind of roll with the punches. You're like, yeah, we're going to figure this out. I think every scaling company has its own like version of chaos, but it's the most fun, I think.
I guess, to throw the more chaotic example out there, it's like a WeWork or Uber or one of those that, gets the negative press, and then they kind of, burn, or they just kind of execute all wrong and go all wild. So sounds like it wasn't that chaotic in comparison.
No.
Yeah.
No. I mean, I think, not to like overly comment on WeWork or Uber, but I think a firm always had a sense of we are long-term focused on the mission of like building honest financial products for users. And so like kind of heads down, like even when like the IPO happened and went crazy and the stock price has been very volatile, like I think people were just like, all right, heads down, we're going to keep building a great product and we believe in it. So we could kind of ignore, it was like more, you know what I mean? It was just like a little bit different.
Yeah. Got it. And so like from there, then, you spent your time at a firm, and then it went public. And like, what was the thought process then to, finally say, okay, I think venture capital might be, the next point in my career?
Yeah. So again, it was something that I had considered, but wasn't, I kind of thought like maybe after I have like a full operating career as a product person, I'll consider it. But I got to know the team at Bain Capital Ventures. One of my partners, Merritt Hummer, was actually in my business school class, and I kind of got her advice on like, hey, I'm thinking about, whether or not this could make sense for me because I enjoy my angel investing so much. And she basically said, wait, like you're even open to this? Like you have to meet my team. And so she introduced me to the other partners. And as I got to know the team, I just realized that this was something that I knew I was going to love because I loved my angel investing. And this would give me more space to kind of make more thesis-driven, deeper, targeted investments where I could spend I could spend all day working with those companies and trying to help them, as opposed to more of a part-time thing. And that, like, I felt like this group of partners was one that I wanted to work and grow with. And so, I got to know them over a long period of time, and then they made me an offer to join, and it just really felt right. Like, I think joining a VC firm is more like joining a partnership is more like a marriage than it is other things, because you have to like feel like you want to spend 10 to 20 years there. So it can be a big deal to make that decision.
So it wasn't like
Lit and I joke that we're basically married.
Yeah.
You guys are. You can make it really
we bicker.
cute couple.
Yeah. So I mean, like that, going back to how you were saying joining the firm shouldn't be an audition, right? Like that, it sounds like this was sort of very organic. It's like I want to be here and do this full time. So that's also just what I get the sense of, having been deeper into the whole tech ecosystem and whatnot. Like having spent time in private equity, everyone's kind of like, yeah, I mean, I'm doing this to make money. It pays well. And then I'll go to business school or launch my own thing. But here, truly, I feel the people who go to venture capital actually want to be, in venture capital investing. And
I would say that too from the outside in, just like even the personalities you see on Twitter and the dichotomy of that. But Christina, one question that I'm curious of. So at this point in time, was it more that you left a firm to go to Bain, or that you left a firm kind of just wanting to get into VC? I'm just curious again with the thought process there for shareholders. Yeah,
I mean, I think you have to really feel like the place. So, and again, it depends on where you join a VC firm, right? Like if you're joining as an analyst, I think it is a little bit of a different thought process than if you're joining as a partner. But for me, like the group of people and the style of investing was really important. And Bain is a very collaborative partnership, and also very focused on, a few sectors. And two of the sectors, so the four sectors are like fintech, commerce, application software, and SaaS, and then infrastructure and security. And so fintech and commerce, BCV has an incredible portfolio and an incredible right to win and an advantage being attached to Bain Capital, a $130 billion asset manager that owns retail companies, and that is a big player on Wall Street. And so we get the benefit of that scale and of those relationships and of seeing across the capital stack, like what's happening. So I felt like the fit was very, very important.
That makes sense. Yeah, I mean, you can go to Bain Capital to do the most mature, largest buyouts, and then be dabbling in, the early stage sector, seed, Series A, even growth. So it sounds like, it's where more firms are spending time building out their full stack capabilities, right? And so I guess one question that comes from that, when you were saying part of the larger total, enterprise of Bain, is there like any affiliation still with Bain and Co., like the consulting side? Is there any like collaboration? That's probably just my ignorance, but that's a question I've always had.
You of all people should know, Lit. Come on.
It is a totally separate company, but there is still like some of that continuity of relationships. So I guess, there's some affiliation, but it's not tightly coupled at all. Yeah. I mean, we work with Bain & Co. on certain, certain projects and stuff. Yeah.
So then, we've established up to Bain, and now I think I want to ask the questions that our shareholders are curious of, but also that I'm curious of. So, Christina, how did this relationship with Lit start to be able to have him follow in your footsteps of being a scout?
Yeah, totally. So back to the very beginning. No, I had followed Lit on Twitter for a while. Like, Twitter is just a beautiful place.
It's wild.
Yeah, it's just. Oh my God, yeah. So I want to
Mark's
get.
had a definite, yeah.
Have you guys
tough,
talked about Twitter already?
Yeah. My life is just the ups and downs of people harassing me on Twitter these days. It's great.
It's good hazing to him, yeah.
That is great. Yeah, no, what I want to hear from you guys is what you would propose Elon Musk do. If you were running Twitter, like, if like Elon Musk appointed you as chief of staff, like what changes would you guys make? Like, do you agree with his plan? But I'm not going to won't derail this conversation yet, but I do want to ask.
We'll do that after.
Yeah, we'll table that one for a few minutes from now.
Yeah. So I met Lit on Twitter. I started following him on Twitter, them on Twitter.
Gender neutral.
Gender neutral, exactly. And and I loved the content. I mean, I thought it was so great. And really captured something, especially like kind of a TBT from my Goldman days, as we discussed in the beginning. And so then I think when we started following each other, we started kind of tweeting back and forth. Then we just started DMing. It's like, what's up? What you seeing? How's it going?
Yep.
And then the DMing eventually was like, okay, yeah, why don't we talk about some of this stuff? This is pretty interesting. So then we just built a relationship, and over time, I was like, okay, why don't you want to get more into investing and closer to, supporting early stage startups in a more structured way. That's what I do all day. Let's collaborate on it. And so we have a small scout program at Bain. It's not a big one. We don't have we try to keep it pretty, tight in number of people wise, which is kind of different than some other scout programs. And I felt like this could be just a beautiful relationship. I don't know, Lit, what do you think?
I think you phrased it more eloquently than I would have. I basically, had followed just saying, hey, look, Christina works in fintech, and that was, a sector that interested me. And then I specifically remember when I saw the announcement of you joining BCV, I dropped a couple of fire emojis, under the tweet. I was like, yo, and then and I was like, hey, let's do deals. And I at that point, it was late 2021. And I had just invested way too much of my personal money into startups, and I was like, shit, I want to keep doing this, and have now just started to realize the flywheel of content and then the deal flow coming from that, and was just like, well, now what? And so it was beautiful timing to get connected with you and just exchange notes. And it seems like we were focused on a lot of the same sectors in fintech, in the creator economy, e-commerce, etc., and even just Web3 and DeFi, and how everything is kind of blending all together in some sort of way that I was like, I'm so on board, and thought that could scratch the itch of I think that you mentioned before, using an analytical skill set beyond what you're missing from a prior job. And so that was something that doing memes full time, I was like, well, I kind of miss investing in analyzing businesses, and so this can definitely help me do that, and support founders as well.
And so just to kind of clarify on the whole scout type thing for our shareholders. So you essentially, by having kind of, and Christina, you talked about this back in 2016 when you started with Sequoia, but because you have kind of a different thought process than someone who's actually doing that full time, going in, working the X amount of hours a week, but you're also exposed to different deal flow. And so that's kind of the thought process with Lit, that he's seeing things differently than maybe you would per se see, right?
Yeah, exactly. I think it's both seeing things differently, like evaluating spaces differently than me, and having a online platform means that like you have both differentiated access to opportunity, like of people raising, and then people who have startups will want to get your thoughts on distribution or on meme go-to-market, the hot new thing. But there's a lot of kind of next-gen media entrepreneurs, right, that have leveraged their online platforms for investing. And I've talked about this a little bit, but the Harry Stebbings was kind of the original example, and then David Rosenthal and at Acquired and Packy McCormick and Not Boring, and all these people are now have funds. And so I think, entrepreneurs, like what I love about Packy's platform too is it's the new way to announce your funding round, right? And you can go in TechCrunch, or you can have Packy thoughtfully dive into your business and explain it to the world for you. Like that's pretty differentiated, right? You could do that with memes, Lit. That's great. You could do meme funding announcements.
We'll do the meme funding announcements, like with the hype up videos, and do a deep dive on top of that. That's something that we're trying to build out, but trying to find the niche, because I'm not a writer first. I love to meme, and would rather do that. And then, Mark actually...
I'm not a writer first at all.
Yeah, indicative of his, Slack, typos all the time. But no, speaking of like meme distribution, I mean, that's something that we just announced yesterday. Mark, if you want to talk a little bit about that, I think that just goes to show now that this is something that used to be, or I guess VCs have been ahead of this, of like realizing the power of media distribution online, but now we announced something with a publicly traded company that we'll be doing, and Mark was really instrumental in that.
Yeah. I mean, a large shareholder, the largest shareholder of this company, RCI Hospitality Inc., they reached out to me, and over the course of a few months, kind of came up with some ideas, because he was like, look, I think you guys could be a megaphone for my company. And like Lit is saying that, there's all that opportunity that I think VCs have seen first in terms of this media distribution. But even something like, I don't know if it was today or yesterday, we'll be actually playing or, making this available for download a week from now, so it won't be timely. But when Robinhood Snacks announced that they were separating from Robinhood, and that they were someone they were acquired in, 2018, 2019, whenever it was, and now they're spinning back out, because all of these companies, whether it's crypto, whether it's, a new trading platform, like they need these voices. And so it's a fascinating thing for us to kind of go, okay, we started at memes, and now we're here working with, large publicly traded companies on this. It's a wild ride, but I think it's definitely something that originated in the VC space. But one thing I want to ask before we get away from anything with the VC space is, so both of you, Lit, you being newer to the whole investment process, and Christina having more experience, what are kind of 3 things, if you could just pick, that are most important for you when you're looking at an early stage startup?
Do you want to take that one first, Christina?
We'll give you some time to think.
Yeah, so early stage startup. So 3 most important things for me. I mean, this is going to sound obvious, but number 1 is the founders, right? I think I'm really looking for people who fundamentally believe that they need to bring this idea into the world, and they are going to stop at nothing to do that. And so just that sort of drive and dedication and passion for the problem space. And then second, to that point, I'm thinking about what's their unique insight on the problem or the market that they've earned. And then third, as a product person, I'm really product oriented. So like, how deep are they empathizing with the customer or the space that they're trying to solve in? And then how interesting is that product solution? Like, how are they solving that problem? And is it something that I think is unique, defensible, game changing? But the earlier the investment, the more it's about the people.
Yeah, I agree with all three. So let's move on. No, I actually do agree on the founders. Like, just you see a founder, and it's like always, at least in pre-seed or seed, just hey, we have this idea of a product, or we have something that's very early, and just like believing that they are the right ones to execute on that vision that they're selling, and it's like that's. You're trusting them, and you're backing an individual rather than on the most mature end, like a cash flowing company that is global and has a ton of historical revenue. And then I guess the other two, I'll have to come back to those other two, but I mean Christina pretty much summed up the best ones that I could think of off the top of my head. But yeah, it's definitely a very different game underwriting as an angel versus private equity.
Definitely. And so one kind of ancillarily related question I want to ask on that though is about gender diversity. And so for you being a female in a male dominated space from your time at Goldman, I would assume at LinkedIn and at a firm, it was much better ratio, better mix, if you will. But then being in VC, it's still a traditionally male dominated industry, right? What is that like, and what advice could you give to our shareholders out there who are female and starting off their careers?
Yeah, I mean, I think I'm lucky. I have benefited from many women kind of trailblazing before me. So I am by no means, someone who is like, I'm not the first female partner at BCB, right? Which is great. A lot of people, women who joined funds, they were like the first female partner. I was not. They had already two. And at Goldman, similarly, like even though there weren't a lot of senior women, there were a lot of, I think our analyst class was not that undiverse from a gender perspective.
I think they're almost like 50-50 now.
Totally. And I'm sure if college admission trends are any kind of indication, it'll be more women than men soon. But I still think you do see a big drop off at the top, which is where we do need more representation from women. And honestly, like my biggest advice is like stay in the game. It's a lot about like just do good work, build good relationships, and good things will come. And so, I have never felt in any way disadvantaged for being a woman, and I may be lucky to have selected environments where that's the case, but I've also never let it like bother me. And even in environments like actually, when I was an intern at a different bank, not Goldman, definitely not Goldman. They would never.
We're not going to say the name of the bank.
We're not going to say the name of the bank, but it's like a well-known one. I was an intern there in the LA office, and they like took all the interns to a strip club. And I remember being like, I'm going to just be one of the guys, like, no problem. Just keep it cool. And then I like went out with them, and I got to the door and I said, okay, this is ridiculous. I am absolutely not freaking going into a strip club. Like, no. And I just left. I was like, bye guys. Like, you guys have fun. Like, I'll see you at the office tomorrow morning. So I think it's like, we've come a long ways in that regard. I find keep your head, like, keep doing good work. Find good mentors, like find good people to like, build relationships with, and good things will come.
Awesome. Lit. You got any more questions, or should we move into our appendix section?
one last thing before we do move into the appendix section, I just came back from Miami and actually hung out in real life with some BCV folks. Christina connected me with Tina Dimitrova, and then we were on this yacht party on the last Saturday, and also ran into Rack Garg, if he's listening. So we had a great time, took some shots, and chatted about Bain and how cool it is. So you were missed, but maybe we'll all have to hang out sometime in person.
Yeah, no, we will definitely have to hang out in person. I will say I'm actually pregnant right now, so I'm not taking shots, but I will.
Oh, okay. Well, congrats. Yeah.
Thank you.
All right then. Well, that is a good moment for us to move into our next section, which is a quick little thing that we like to do, here and there, and it's a game called Cash or Pass. And so the way that we play Cash or Pass is, we'll come up with a quick idea, and we'll give you a chance to react, if you'd invest, so cash or pass on it.
Yeah, and we try to, create these and have them be payments focused, given your focus. And so the first one that we want to start off with is, we're going to call it BAINcoin. And essentially it's a token, it's a coin that you guys would be able to give to the startups that you invest in, but they can only spend it with other portfolio companies that you guys have. So it's essentially, you're making money out of nothing, but I'm sure we can get an accountant in to figure it out on the books how it works. And so it's like, if you have a SaaS company and they're providing a service to, some life sciences one, the life sciences company, they're using BAINcoin to pay for it. What do you think? Cash or pass?
I think probably pass.
I think this is all going to go pass, man.
Why do we need a coin for this?
Mark?
Well, this was your idea, so why don't you go into the deep explanation right now? I'll let you handle that. You kind of like to get in the weeds more.
Yeah, okay. Yeah, I mean, I would pass on that one, but look, okay, I'll say the next one here. Okay. So metaverse jail, okay, for bad actors and rug pullers. So NFT space is really,
it's like a for-profit prison, but in the metaverse.
In the metaverse, yeah. So it's like you're taking out all these bad actors, and you charge for keeping them in there, and maybe you could stake jail coin or something. So
yeah, they could mine jail coin. Yeah. Your metaverse persona, because you wouldn't be in jail in real life, but your metaverse persona can then mine jail coin to get out. That's how you get out of there.
So who's paying for the prisons? Is like the metaverse
it's
federal
for profit.
Government.
It's for profit.
Got it.
So it just depends the company and their capital structure, right? Like, it's really going to be idiosyncratic. I can't say exactly who.
That sounds.
You'll take
great.
a bit of their like wallets. If they stole a Bored Ape or something, you hold them hostage and maybe, I don't know, fractionalize it and start to take it away from the prisoners themselves, if there's a way to do it.
No, I love that one. I mean, if Paris Hilton can charge people to stand in line, in the
she's
metaverse,
going to be the warden.
If she's the warden of this jail, I'm in.
Yeah, I'll go to the jail personally. Fine. Now, this is, came in from our payment specialist that we have on staff. So this is, we're not sure the name of it, but it's kind of a payment system for parents to be giving their children allowance, right? And so, there's going to be a real world utility and then a metaverse utility. So if, they're playing some online game, something like that, whatever. But, it's all coming through the same wallet. And then, the parents, they're just kind of giving it based off the kid's behavior, because I feel like that's just something that is needed in the future, right? To put kids closer to technology the younger they are.
Interesting. I mean, I think there's like an interoperability there, which I like. So maybe the startup is like the on-ramp from fiat to like either the in-game currency that your child is most
it's going to be
interested
sponsored. I think the market is going to be fragmented by CoinFlex and the FTX. They're going to try and just on-road all these babies, get them away from fiat immediately out of the womb, and then just take it from there. It's just a way to get market share. It is what it is.
Yeah, exactly. Someone should just like open a wallet for every new baby. Born,
Exactly. Oh, that's a good business idea. Yeah, let's just create wallets for every baby. And if they don't redeem it, then it's ours. Just makes sense. Yeah.
Yeah,
I like that
actually,
one better.
You could have like every baby born maybe has like an NFT, and then it like changes value depending on like how they're what they do with their life or something.
Yeah,
so
no, I like that. I like that.
Like if you got the Elon Musk NFT when he was born,
Yeah, one of one. Yeah.
that idea
I
makes
like
no
that.
sense.
I like
but,
that. The hospitals should get into the NFT business. I feel like that'd be like, I'd pay like $300 extra, to get like an NFT of my kid. I think. I don't know. I haven't really thought about that fully, but I feel like I would. If it was an offering, it just goes to my MetaMask, fine.
I think that would create some weird market dynamics where like everyone would pile into, say, Warren Buffett's, or if he has kids or whatever, because he's not going to have a kid anytime soon. But
like Tom and Giselle's kids, right?
Yeah, exactly. Yeah, like, this famous person or whatever, like I'm definitely investing in like their kids' NFT. But
the ethical considerations around that would actually be fascinating, because it's like, I forget what the expression is, but like, the one generation makes the money, the second, like, whatever, then the third's bankrupt. Yeah. But it would like, you could argue like the psychology wise, it would just put so much more pressure on these kids of successful people to, get to their caliber, which usually doesn't happen, but interesting. So okay. All right. Anyway, away from the psychology stuff.
Last question then.
Last question. Yeah. Twitter. What are we changing? I'm going to say the one thing I want to change is when you start off a tweet and you tag someone and it gets hidden or something. Someone told me that, so you have to put a period in front of it. That's stupid. Just I think that needs to be changed. Number one. Mm-hmm. Then I'll let you guys handle the rest.
Yeah. Christina, do you have any immediate changes that you would instill on the Twitter platform?
I don't tweet enough. I wanted to know from you guys, because I feel like you're the ones who tweet a lot more than I do. Like I'm pretty boring on Twitter in the sense of my distribution is not as great.
Let's get you a couple of memes. I can ghostwrite some for you and Mark too, so we'll get your follower
or
count
just
up.
Create a burner like everyone else, and then that's just what people do, and then they just like go off. It's crazy. There was like this group of like 80 or so kids on FinTwit who they hated me in the beginning, and so like over the past like I don't know months, I've started to win them over. I'm in a few group chats with them, and met with one of their leaders personally. And so, we brokered a peace agreement, and here we are. But it's fascinating out there when you can just be anonymous.
One of the things that I will say at least is what I'd change on at Twitter is the types of voice changers available on the platform, because they have a feature which I learned for Twitter Spaces that allows you to sound either like a robot, not like what people are listening to here, but it sounds like a much more muffled drug lord.
Yeah, like a junior varsity version of you.
Yeah, exactly. And then there's a Megatron sounding one. There's like a balloon, helium chipmunk sounding one. But there's nothing like kind of middle, light voice changer. So that'd probably be like the main thing that I would change first.
Well, Christina, this has been phenomenal. Thank you so much for all of the advice that you've offered the shareholders and for sharing your story with us. We really appreciate it.
Yeah, this was fun. I can't wait till we continue to give Elon Musk product advice.
Exactly, unsolicited product advice. Exactly.
Yeah, and let's do some more deals.
This has been Big Swinging Decks by Litquidity with your hosts, Lit and Mark Moran. This is a Red Rock Music podcast. Our executive producer is Red Yoakum. Our associate producer is Emma Martins. For more, follow us on Instagram at Litquidity and at It's Mark Moran, or visit the official website, litquidity.co. So tune in weekly to your Managing Director Secretary's favorite podcast, available wherever you listen to podcasts.